In this video, I'm going to take a look at how to trade spinning tops, pin bars, and doji patterns. These are all very, very similar candlesticks. The main difference, I'll go ahead and draw them out now, is that a spinning top has longer legs. It's basically a neutral candlestick. A pin bar is more like this, and a doji is shorter. So these all tell different stories. For example, the pin bars show signs of exhaustion in one particular direction. The spinning top shows a wide range and indecision. And the doji shows indecisive trading without a wide range. A lot of times you'll see a doji when there are no driving factors in the market. It's just kind of listless. So the idea is that when you break the range of one of these candlesticks, so for example, in the spinning top, which is named as such because it looks like a spinning top, the child's toy. But when we get a spinning top like this, and you break down through it, that shows that a lot of momentum has shifted. Because if you think about the line chart of that, it's going to look something like that. And if you break the bottom of it, we will have had to have seen a resumption of bearish pressure, or bullish if we break the top of it. So a spinning top is a very interesting signal. The pin bars, and these are called pin bars because they're like Pinocchio bars. They have long noses and they lie. So what this means is, with this candlestick, if you break the bottom of it, it's a sell signal. And the reason is the buyers came in and then they failed. And then the next day or hour or whatever, everybody in that candlestick is losing money. Just like if you have a pin bar in the other direction, it's bullish if we can break the top of it. The doji is, for my money, a lot less reliable. Typically, you want to stay in the trend, but in theory, you can trade it in both directions. Out of these candlesticks, the doji is by far the least reliable, though. So let's take a look at a couple of examples. In this trade here, we had a spinning top form because it's got kind of long legs there. And once we broke through the bottom of it, we did, in fact, sell off. You would put your stop loss on the other side of the candlestick and your sell order at the bottom, like once we break through that range. You could even make an argument for a couple of spinning tops in a row. So that's an even more valid signal, if you think of it that way. The pin bar, and you'll learn about another candlestick formation called a hammer and a shooting star, very similar. But a pin bar has a very small body. Sometimes it's even completely flat like that. So during this candlestick, people rallied. And then we eventually broke down. Well, everybody in that candlestick is losing money. And you can see it leads to a pullback. You enter on a break at the bottom. You put your stop loss on the other side of the candlestick. And you just simply let it rip. And then finally, a doji. A doji, a lot of times you'll see them on shorter time frames. This is somewhat of a doji. That's a doji there. Really not a lot of range. And you can see that we did, once we broke below it, we did drift a little bit lower, but it wasn't a very powerful move. So dojis are typically quick hits, if you will. Now, if you're in an uptrend and you see a doji break to the upside, then that could be a continuation signal. And that's generally the best way I have found to use them. This doji here being broken to the upside was a good sign. Showed that resistance got broke. This doji here, etc. So these are pretty standard and straightforward candles. Here is a pin bar here that broke down. And then, of course, the spinning tops that I had shown you previously. Now, remember, everything in trading means more when it's at support or resistance. So look to your support and your resistance levels when trying to ascertain how to take the trade, or whether it's something you should even be paying attention to. If you're at a good resistance level and you have a spinning top, for example, we break down below the bottom of it, it makes sense to short the market.